Most traders lose money, but the real reason isn't what most people think. It has nothing to do with intelligence. It isn't about having access to hidden information. Every struggling trader I've observed has seen the same charts. They use the same indicators. They recognize the same patterns as the consistently profitable traders. The true difference lies in something deeper. It is a psychological pattern most traders never address. Until you conquer this, consistent profitability remains out of reach. It drives behaviors that destroy accounts. Smart money understands liquidity. They know every major move needs fuel. That fuel is often retail traders. These traders are positioned on the wrong side. This is not some abstract theory. This is how markets actually operate. Professional traders identify stop clusters. They pinpoint where breakout buyers will enter. They see where weak hands will panic exit. Then they trade the exact opposite direction. Retail traders behave in the opposite way. They chase breakouts. These moves are often already exhausted. They place stops in predictable locations. They enter when a setup looks obvious. This means smart money has already taken positions. Smart money is now looking to exit into their incoming orders. This constant pursuit of the next big move is a major trap. Many traders scan 15 different charts daily. They apply 10 indicators to each setup. They believe more data leads to better decisions. This often results in burnout. It inevitably leads to overtrading. Their account balance still shrinks month after month. This pattern is sadly common. This incessant search for signals creates a dopamine loop. It feels incredibly productive. However, it systematically destroys capital. It actively prevents true mastery of the markets. The market offers endless opportunities, but not every opportunity is for you. The fear of missing out, or FOMO, fuels this behavior. It stems from a lack of conviction. Traders lack faith in their own process. They constantly seek external validation. This means relying on signals or gurus. This creates dependence. It actively prevents trading independence. The market expertly exploits this psychological weakness. Smart money patiently waits. They wait for moments of retail indecision. They capitalize on the noise. They profit from amateur desperation. What truly happens when you stop chasing every single setup? You gain immediate clarity. Your trading focus narrows dramatically. You develop genuine patience. This is an incredibly rare skill in trading. You begin to see high-probability setups clearly. These setups often appear infrequently. You understand the immense power of doing nothing. Doing nothing is not a passive act. It is a powerful trading decision. It meticulously protects your capital. It preserves your vital mental energy. It builds ironclad discipline over time. This concept is counterintuitive for most traders, yet it is a foundational truth. Elite traders approach opportunities differently. They precisely define their edge. They wait for their exact specific conditions. They understand that missing a move is not a loss. It is simply a non-event. It costs nothing at all. The real comes from forcing unnecessary trades. True profitability stems from selective execution. It is about the quality of your trades. It is not about the quantity. Richard Dennis, the legendary trader, taught this effectively. His famous turtle traders learned extreme patience. They waited for very specific trend conditions. This disciplined approach led to extraordinary, consistent returns. They did not chase. They waited. How do you build this kind of conviction? It starts with deep market psychology understanding. You must master your own inner game. This involves specific frameworks. These frameworks govern risk and emotion. It is not about discovering new indicators. It is about profound internal work. This is precisely where the elite separate themselves. They study their mind as intensely as they study the market. They know their own weaknesses intimately. They develop robust mental systems. These systems mitigate their inherent flaws. This is precisely what you will discover inside the seven-figure trader's mind vault. It contains the complete psychology system. This is everything elite traders studied to master their psychology. These are the frameworks, the audiobooks, the mental systems. These powerful systems turned struggling traders into consistent winners. This is what every seven-figure trader has studied and mastered. These are the mental systems most traders never even know exist. Link in the description. To practically stop chasing, define your specific criteria. Write down your exact trade plan. Only execute trades when those criteria are fully met. Use smaller timeframes for entry confirmation, but base your core conviction on higher timeframes. Ignore the constant noise from lower timeframes. Limit your total screen time. Set precise alerts for specific levels. Do not sit and watch charts endlessly all day. This practice reduces impulsive decisions dramatically. It fosters a calm, deliberate trading approach. Imagine a sniper waiting for the perfect shot. They do not spray bullets randomly. They wait for high-probability targets only. Trading demands this exact same precision. What happens to your account balance over 6 months? Your win rate improves significantly. Your average win size often increases substantially. Your drawdowns become less severe. You gain unwavering confidence in your process. Trading becomes far less stressful. It transforms from a risky gamble to a precise business. This fundamental shift is profound. It changes everything about your trading. It frees up vital mental bandwidth. You can analyze market structure more deeply. You develop a true, lasting edge over time. This is the authentic path to consistent profitability. This is the defining difference for the top 5% of traders. It is within your reach. The authentic path requires deliberate effort. It demands a fundamental shift in perspective. Most aspiring traders make a critical mistake. They focus on the what instead of the how. They chase specific setups. They seek the perfect indicator. This pursuit of the Holy Grail is a distraction. It prevents true skill development. An edge is not a secret strategy. It is a robust, repeatable process. This process is built on self-mastery. Consider Trader A, the amateur. Trader A scans social media for hot tips. They hear about a stock surging. Fear of missing out takes hold quickly. They buy without a clear plan. No stop loss is set. The stock reverses sharply. Trader A holds, hopping for a bounce. Emotional decisions now drive their actions. They might average down, adding to losses. This reactive approach leads to inconsistent results. It often results in significant account drawdowns. Trader A feels constant stress. They blame the market or bad luck. Their trading journey becomes a cycle of frustration. This cycle is detrimental to long-term success. Their initial capital quickly erodes. Trader A experiences several cognitive pitfalls. Availability heuristic makes them overemphasize recent news. Confirmation bias leads them to ignore opposing data. They seek only information supporting their trade. Optimism bias inflates their perceived chances of success. They overestimate their ability to predict markets. Anchoring bias keeps them fixated on their entry. They resist acknowledging their trade is wrong. These psychological traps are powerful. They undermine objective decision-making. They prevent any consistent edge from forming. Now contrast this with Trader B, the professional. Trader B starts their day with analysis. They identify specific market conditions. They wait patiently for high-probability setups. Their entry criteria are clearly defined. A precise stop-loss is always in place. Trader B understands risk management intimately. They risk only a small percentage per trade. For example, they might risk 1% of capital. This means a zero account risks. If the trade goes against them, the loss is small. If it moves in their favor, they follow their plan. They take partial profits at predefined targets. They let the remainder run with a trailing stop. Trader B is detached from individual trade outcomes. They focus on the overall process. This systematic discipline builds lasting profitability. The professional's psychological framework is different. Trader B embraces delayed gratification. They understand probabilities. They accept that losses are part of the game. Their consistent execution reduces emotional impact. They stick to their proven methodology. This mental resilience is a powerful advantage. They treat trading as a business. Each trade is an execution of their plan. There is no room for emotional whims. They know their edge works over many trades. Individual trade outcomes are less important. True trading mastery stems from this systematic approach. Legendary traders understood this deeply. Jesse Livermore, the boy plunger, emphasized patience. He waited for market confirmation. He recognized broad market movements. Livermore famously said, "There is nothing new in Wall Street." He studied human nature and action. His edge was in observing and waiting. He did not chase every small fluctuation. Livermore also understood the power of trending markets. He knew when to press his advantage. He avoided trading in choppy, unclear conditions. His discipline was legendary. Selective built his success on pure systems. He pioneered mechanical trend following. His rules were explicit, removing discretion. Selective understood human bias. He knew emotions sabotaged trading. His systems eliminated emotional interference. He let the numbers dictate every action. This systematic removal of self was revolutionary. Selective's programs would execute trades. They did not waver due to fear or greed. He focused on long-term statistical expectancy. His approach defined systematic trading. Paul Tudor Jones is a master of market timing. He identifies major turning points. His macro perspective is unparalleled. Tudor Jones prioritizes capital preservation. He risks very little on any single idea. He says, "The first rule of trading is don't lose money." His edge comes from meticulous preparation. He combines fundamental insight with technical analysis. He waits for optimal conditions. He is known for his aggressive risk management. He would cut positions that moved against him. He protects his trading capital fiercely. Mark Minervini exemplifies systematic growth trading. He developed specific entry patterns. He focuses on leading growth stocks. His methodology is highly structured. Minervini identifies superperformance stocks. He enters after consolidations. Strict risk management is central to his plan. He cuts losses quickly and precisely. He rides winners for substantial gains. His disciplined approach yields consistent results. Minervini emphasizes high relative strength. He seeks stocks outperforming the general market. His system is designed for maximum leverage. He combines technicals with fundamentals for robust selection. William J. O'Neill created the CAN Slim method. This system combines fundamental and technical factors. O'Neill sought companies with strong earnings. He looked for specific chart patterns. He emphasized institutional sponsorship. His method provided a clear framework. It guided traders to high-potential stocks. These traders all shared a common thread. They developed a distinct, systematic edge. They did not rely on intuition. They relied on repeatable, tested processes. Their success was not accidental. It was the result of deliberate design. Amateurs, conversely, often fall prey to several cognitive traps. They exhibit confirmation bias. They seek information that supports their existing beliefs. They ignore contradictory evidence. Recency bias makes them extrapolate recent events. A few winning trades create false confidence. A losing streak leads to paralysis. Overconfidence leads to excessive risk-taking. Fear causes them to exit good trades prematurely. These biases are deeply ingrained. They must be actively managed. They are powerful forces against profitability. The professional trader recognizes these biases. They build systems to counteract them. Their trading plan is a safeguard. It enforces objectivity. It demands discipline. They understand market regimes. An edge might work better in trending markets. It may struggle in choppy conditions. Professionals adapt their strategies. They adjust risk exposure. They avoid forcing trades. They know when to be aggressive. They also know when to sit on their hands. This flexibility is crucial for long-term survival. Consider the compounding effect of proper methodology. Trader A starts with zero. They have no consistent strategy. They take a 20% loss in month 1. Their account is now zero. They need a 25% gain to break even. This becomes an uphill battle. They might lose another 15% in month 2. Their account drops to 800. After 6 months, they are down 40–50%. Their capital base shrinks rapidly. Recovery becomes increasingly difficult. Emotions amplify these losses. Desperation leads to even worse decisions. The amateur trader often quits disillusioned. Trader B also starts with zero. They consistently risk 1% per trade. They aim for a 15% annual return. This is a realistic, achievable goal. Year 1, 0 becomes 500. This is a solid start. Year 2, 500 becomes 225. Growth accelerates slowly. Year 3, 225 becomes 208. The power of compounding builds. Year 5, the initial 0 grows to 113. It has doubled. Year 10, that 113 becomes 455. The growth is exponential. This consistent, moderate growth transforms capital. It illustrates the power of compounding. It demonstrates the value of method over luck. Small, consistent gains lead to significant wealth. This is the authentic path to financial freedom. It requires patience, not speculation. Building this lasting edge involves several key steps. First, define your specific strategy. What market conditions do you target? What are your entry and exit rules? Second, backtest your strategy rigorously. Ensure it has a positive expectancy. Understand its drawdowns and win rate. This validates your methodology scientifically. Third, develop a comprehensive trading plan. This document outlines every aspect of your process. It covers risk management and trade management. It specifies market regimes where your edge performs best. Fourth, journal every single trade. Analyze your performance objectively. Identify areas for improvement. Reviewing past trades reveals crucial insights. Fifth, master your psychology. Recognize your biases. Build routines to maintain discipline. Practice mindfulness and self-awareness. This internal work is as vital as market analysis. An edge is dynamic, not static. It operates within specific conditions. Your strategy might excel during strong trends. It could struggle during sideways consolidation. Understanding these market regimes is vital. A professional trader adapts their approach. They reduce position size in unfavorable conditions. They might shift to different asset classes. They understand their edge has limits. They know when to be patient and wait. This contextual awareness defines advanced trading. It moves beyond simple entry and exit rules. It encompasses a holistic market understanding. This structured approach to market psychology and systematic execution is precisely what separates the elite. Understanding these cognitive traps and mastering emotional regulation forms the bedrock. Amateurs chase fleeting opportunities. Professionals master themselves and their process. They study the mechanisms of market behavior. They learn from historical patterns. They build robust frameworks. This exact framework, the one consistently profitable traders use, is covered in the Seven-Figure Trader's Mind Vault. The complete psychology system. Link in the description. The journey to consistent profitability is not glamorous. It is a path of deliberate practice. It requires patience and persistence. It involves constant learning and adaptation. Your edge is not found in a secret indicator. It resides within your disciplined approach. It is forged through consistent, objective execution. Embrace the process, not just the outcome. That is where true trading success lies. That is how you join the ranks of the top 5%. This level of mastery is attainable. It starts with your commitment to the process. Your commitment to the process is paramount. It separates casual dabblers from serious contenders. Most traders focus solely on external factors. They chase new indicators. They seek the next perfect strategy. They endlessly optimize their entry signals. Yet, their results remain stubbornly inconsistent. This is the painful reality for the vast majority. They cycle through hope and despair. They experience fleeting wins. These are followed by crushing losses. Their accounts slowly dwindle. Frustration mounts with every setback. They believe the market is against them. They think they lack some secret knowledge. The truth is far more profound. The true battle is not against the market. It is waged within themselves. This internal conflict manifests as emotional trading. It leads to impulsive decisions. It causes fear-driven exits. It creates greed-fueled overtrading. These psychological missteps destroy accounts. They erode confidence. They prevent any real progress. This cycle continues indefinitely, unless you choose to break it. Breaking this cycle requires a fundamental shift. You must turn your focus inward. You must master your own mind. This is not some abstract concept. It is a systematic, actionable approach. It builds robust mental resilience. It cultivates unwavering discipline. This mastery is within your reach. It starts with specific, deliberate actions. Here is your actionable framework. These are the steps to internal transformation. This is how you build a winning psychology. This is how you join the top 5%. Step 1. The Daily Trade Journal. This is your personal truth mirror. You must record every single trade you make. Document your precise entry and exit points. Note the exact reasons for your decision. Critically, capture your pre-trade mindset. What were you feeling before entering? Record your emotions during the trade. Were you anxious? Were you confident? Write down your post-trade feelings. How did the outcome affect you? This practice reveals invaluable patterns. It identifies your emotional weaknesses. It highlights unconscious biases. It uncovers your recurring psychological pitfalls. You cannot fix what you do not acknowledge. How to do it? Use a simple notebook or a dedicated digital spreadsheet. Be brutally honest with yourself. There is no room for self-deception here. Time frame. Start immediately with every trade. Commit for at least 30 consecutive days. This forms your foundational psychological data. Step 2. Mindset rehearsal and visualization. Prepare your mind before the market opens. This is not optional for elite traders. It is a critical daily ritual. Why it works? It primes your brain for success. It reinforces desired behaviors. It reduces reactive emotional responses. This builds a proactive mindset. How to do it? Find a quiet space each morning. Close your eyes for 10 to 15 minutes. Visualize your ideal trading day. See yourself executing your plan perfectly. Feel the calm, disciplined focus. Imagine handling losses gracefully. Visualize sticking to your stop loss. See yourself taking profits according to your rules. This mental rehearsal builds neural pathways. It programs your subconscious for consistency. Time frame. Implement this daily before market open. Give this practice at least 60 days to solidify. Consistency in this mental work builds powerful psychological muscle. It prepares you for the day's challenges. Step 3. The post-trade emotional audit. Go beyond simple profit and loss review. This is where real growth happens. This is where transformation accelerates. Why it works? It detaches emotion from the trade outcome. It turns every mistake into a powerful lesson. It builds objective self-assessment skills. You learn from every experience. How to do it after closing each trade, especially after a losing trade. Ask yourself key, probing questions. Was this trade aligned with my written plan? What specific emotions did I feel? Did these emotions influence my decisions? What could I have done differently? Focus on the process, not just the outcome. This audit builds self-awareness. It strengthens your internal feedback loop. Time frame. Perform this audit after every single trade. Dedicate weekly time for a deeper, comprehensive review. Look for recurring emotional pitfalls. Identify areas for consistent improvement. This systematic approach fosters rapid psychological growth. Understand this is not a quick fix. Mastery takes time and unwavering dedication. Expect to engage in 100 or more trades. Commit to this process for at least 90 days. Patience is truly your greatest asset. Consistency in these practices beats intensity every time. Embrace the journey of self-improvement. Small, daily, disciplined steps lead to huge, compounding gains. Your trading account will ultimately reflect your mind. You now stand at a critical crossroads. One path is familiar yet deeply frustrating. It is the well-worn path of the 95%. It involves chasing endless indicators. It means blaming the market for every loss. It leads to making impulsive, emotional decisions. This path results in consistent account drawdowns. It brings constant stress and anxiety. Ultimately, this path leads to inevitable failure. It leads to giving up on your trading dreams. It means staying stuck in the cycle of struggle. The other path is less traveled. It demands commitment and discipline. It is the proven path of the top 5%. These elite traders master their internal game first. They understand market psychology deeply. They execute their plans with calm precision. They turn every struggle into a valuable lesson. They build consistent, compounding wealth. This path leads to true trading freedom. It leads to lasting success and profound peace of mind. Which path will you choose today? Look, you can keep doing what you have always done. You can keep hoping something magically changes. You can keep chasing new indicators and market gurus. You can watch your trading account slowly bleed away. You can repeat the same psychological mistakes. These very mistakes destroy 95% of aspiring traders. This is a choice you make every day. Or you can choose the path of mastery. You can equip yourself with the same elite mental frameworks. These are used by seven-figure traders every single day. Inside the seven-figure trader's mind vault, you get the complete psychology transformation system. This system reveals every framework that separates the top 5% from everyone else. It distills the timeless wisdom of trading in the zone. It incorporates the profound insights from the disciplined trader. It integrates the battle-tested lessons from market wizards. This vault contains every mental system elite traders studied. They used these exact systems to rewire their brains. They achieved consistent, compounding profitability. These frameworks turn emotional gamblers into disciplined professionals. These are the exact mental tools that make the critical difference. The difference between blowing up your account. The difference between consistently compounding your wealth. This is what the top 5% actually study, while everyone else chases the next hot indicator, while they seek the fleeting market tip. The true, sustainable edge is always internal. Access this powerful knowledge today. The link is in the description below this video. This is the fundamental difference between staying stuck and finally breaking through. Your trading journey is unique. Your commitment to mastering your mind defines your ultimate success. Invest in your greatest asset, your internal game. The rewards are far beyond financial. They are about profound personal growth. They are about achieving true self-mastery. If you found significant value in this discussion, please hit the subscribe button now. Join our growing community of aspiring and dedicated traders. Let me know your biggest takeaway. Share your thoughts in the comments section below. The link to the seven-figure trader's mind vault is waiting for you in the description. Take the essential next step towards true trading mastery. I will see you in the next video.